Mac, thanks for joining me. I've heard your name a lot and only recently had the pleasure of meeting you.
Thanks for having me. Excited to be here.
Yeah, definitely. So we're going to dig into your history. It's literally one of the richest and varied backgrounds I've come across anywhere, not just in Charlotte, but especially rare in Charlotte. Most of my listeners will already know your bio, but at the highest level, you've participated in 6 successful exits. Is that correct?
Varying degrees of success, but yes, 6 exits.
An exit's an exit, right?
Exactly
If you don't get stuck in Vietnam, that's a good thing, right?
That's a finish line.
So obviously there's going to be a lot to cover here with 6 exits. I want to start at the beginning. Where are you from? Where'd you go to school?
So I'm actually a native Charlottean. I'm one of the, I think they say it's 8% now that was born here. And I went to East Meck High School, so I'm part of the East Meck Mafia, as we joke around. And then I went to Wake Forest to play soccer. It's kind of my passion growing up. So started playing soccer there and then finished at Berry College in Georgia.
Awesome. Yeah, soccer I think is going to be one theme that we pick up on as we talk through your history because it's varied and kind of all over the place, but soccer seems to be one that you keep coming back to.
Yeah, it's been a big part of my life, passion growing up, and then has been a constant theme throughout.
Awesome. So what was your first job out of college?
So I actually met a gentleman who I think you know well, Steve Amedio, playing soccer. So we were sort of contemporaries in the soccer world. And when I finished playing, I played 1 year professionally after college. The new league, which at the time was not called the USL, but it was before the MLS existed. So I played 1 year professionally, and then I was looking for a job, and I was hired by Steve for the marketing department of a little software company he was a part of. So that was kind of my first official job.
Wow, what a way to learn with Steve Amedio, but also the professional soccer experience. Can you talk a little bit about what your experience playing on a team, coming up as a youth, and then playing a year professionally? How do you think that impacted your work ethic, the way you operate with others, and kind of your overall career trajectory?
Yeah, it's interesting how, Steve Jobs always talks about seeing the dots connected in hindsight, and that was a lot of it for me. My sole focus for most of my youth was soccer. That was my passion. My dreams growing up is, I wanted to be a college All-American. I wanted to play professionally. I mean, I sort of thought of my life through the soccer lens, and because it was something I was so driven by, it never felt like work to me. I loved playing. I played 7 days a week. And then as I was slowly checking off kind of the goals, I got a scholarship to a great college, and I was, I became an All-American. I've sort of achieving these things. And the next logical progression was to be a professional. The challenge was, coming out of college in '94, there weren't a lot of really good options. And so playing abroad was not an option. There was no MLS here in the U.S. yet. So I played in the best league that I could, but it was a pretty significant drop down from expectations because day-to-day life for a professional at that point was, playing Nintendo and lifting weights and then having a game, or having practice and then having the rest of your day off. And I really felt like I needed to do a lot more with my life than that. So I sort of said, all right, well, I've checked the box. I played a year. It's time to move on.
Okay. Yeah, it's interesting. I played lacrosse in high school and college, and it was the same kind of thing. I don't think I was good enough. I wasn't dedicated enough to play professional, let's put it that way. But the professional leagues, it wasn't a full-time job unless you're one of the top shelf guys who can go actually get some sponsorship deals. And even then, it's nothing like what it's become. I imagine in soccer now you might have a different look at the professional leagues. It feels like it's really taken over America's imagination. Maybe not to the extent that it has the rest of the world, but it certainly feels different than it did 15 years ago even.
Yeah, I'm jealous. I mean, I'm excited for the young American players, but I'm very jealous. The reality of playing abroad is so real now. I mean, if you're coming out of high school, college, and you're a good player, certainly if you're a top 10%, you can play somewhere in the world. I mean, you can play Spain, Germany, Italy, travel the world. And I had an opportunity in high school. I got selected to go play in South America with a team. And so it was a huge part of my life, but I still, looking back, I'm like, if I could have just been born, 10, 15 years later. But no, it's been a really, really meaningful part of my life. as a player, but also as I transitioned to fan, and then as I transitioned to business opportunities, which I'm sure we'll talk about, and how many of my great life experiences were on a field, either as a player or in some other context.
That's awesome. So you're working running marketing for Steve's company. What was the name of that business?
It was called JFL Enterprises. It was a educational software business. Actually, it was becoming a software business. At the time, it was really a gentleman who had this incredible methodology to help kids learn to read, sort of remediation. We were converting his sort of philosophy and methodology into software. And so it was my first exposure to software, but more importantly, for me, it was my first exposure to startup. And so I only worked there, I think it was maybe 6 months before Steve and I, convinced one another that we should leave and start our own business. And Steve was really more of a self-taught engineer. I was really on kind of the marketing side, focused on business, but just the day-to-day life of a startup was amazing to me. Coming in one day, you're trying to learn to write code. The next day, you're taking out the trash. The next day, you're making cold calls. And that energy was just something I knew I wanted to be a part of.
Yeah, I remember when we started Level, I would go do billable work for American Airlines, one of our large clients, and I'd get done, and then I would call the other employees and harass them to get their timesheets in so that I could run invoicing. and it's funny because I'm sitting in a hotel in Dallas away from my young children at the time, but it was still so exciting. And you don't, like you said about the soccer, it doesn't feel like work if you love what you're doing, and it helps when you're doing it on your own around people you love and work well with. It's really exhilarating. It's challenging at times, but it's
absolutely. In hindsight, it's always it's. I remember it being great, but when you're living it, it's actually stressful.
Yeah. There is a dark side to it for sure. So you and Steve decide to go out on your own. Is that In Touch Interactive?
It is, yes. Okay. So In Touch Interactive, first quarter of 1995, we started In Touch. And it was really a custom software company, but we identified the internet super early. So shortly after Netscape launched the commercial web browser, we were moving into the internet development space. We were really, really early Web 1.0. And it was we got a $10,000 loan from a family member. My father was involved as a kind of a partner and advisor. It was just such a garage startup. We were really trying to figure out how to do everything from day one.
Well, and I imagine once people understood the internet, once business people understood the internet, they don't have anybody who knows anything about it, right? There's all of this Unix infrastructure that you need. There's data connectivity that you need. There's web programming. They really can't build those skills. So I imagine that during that time, once somebody knew that they needed to be on the internet, you were almost shooting fish in a barrel, is my guess.
Yeah, well, it's what's crazy is during 95, 96, even into 97, I feel like all I was doing is explaining to people what the internet is and why it matters. We're meeting with Fortune 500, Fortune 100 companies, sitting in boardrooms. We're, in our early 20s, and we're telling them that the internet is going to change their business. And a lot of people agreed with that, or at least were curious enough to, engage us to do something. But we were almost laughed out of rooms. They were like, the internet is not going to be a meaningful thing. It's a flash in the pan. And so a lot of those early days were educating people. And Steve and I and our other teammates early on really saw something that we thought was going to fundamentally shift the market and business. And we felt like we're looking around going, why is no one else seeing this? So it was a really exciting time, but a lot of education, a lot of grind to convince people that they really needed to, think about e-commerce, put their information on the internet, trust a credit card, that kind of thing.
Yeah, you're hitting on a lot of things there. There's so much infrastructure that companies have today. It's almost trivial to set up an e-commerce experience with a secure end-to-end payment processing and loyalty program and everything else that you could possibly possibly want. But back then, you were rolling your own on a lot of these things. There weren't widely available e-commerce solutions, shopping carts, content management, payment processing. Lots of work to be done.
Yeah, and it's kind of funny to look back and think about. We had Fortune 500 companies sitting on a server on a washing and dryer washing machine in our little condo, and that's because there was no sort of distributed platform that you could just turn this stuff on. There was no AWS. You had to have a dedicated server, and when you got to a certain level of capacity, you had to add a server physically. So really, really early days.
That's awesome. So you guys, did you sell that business in 1998?
That's correct? Okay. Yes, May 1998.
And what led you to decide that was the best course of action?
Yeah, that was really kind of the sign of the times, but we were building our company, trying to be profitable. Every dollar we would make, we would pile back into hiring talented people. So we were growing engineers, we were growing designers.
And back then, just for folks who maybe don't know the Charlotte market as well, not a lot of tech talent back then, I'm guessing.
No, we were bringing people in from other states. We were getting really, really early adopters who were more curious to learn how to do some of these things, maybe convert some older programming languages into sort of the modern languages. And so we were really just focused on growing our business. And although we were very profitable, Steve and I, we weren't making any money. We were just really struggling. I mean, I was living in a one-bedroom apartment. I was married in '96. My wife and I were, eating peanut butter and jellies. So when someone all of a sudden came along and said, we want to buy your company, the space got like lightning hot overnight. Like multiple people were interested in buying what we had built. And a lot of that was they wanted our customers, they wanted this market in Charlotte, they wanted the expertise we had assembled. And so eventually we just got an offer we couldn't refuse. We went from kind of being 20-somethings, barely able to get peanut butter and jellies on the table every night to kind of an 8-figure, opportunity that was life-changing. And so we sold the business in 98, and then the acquirer went public in 99, so a year later.
And that was IXL?
It was.
Correct? Okay,
yes.
So this is one that's near and dear to my heart. I joined a competitor, or nominally a competitor in that space. I think the big names at the time, IXL, March 1st, maybe Razorfish, Sapient, Scient, Viant. I joined a company in 2000. I accepted the offer in 99 and started in 2000. When I accepted the offer, they were called BDS. A month later, they changed their name to Talon. And by the time I started with them, they had been acquired for $1 billion. And it was a 300-person company. And they were acquired by CMGI, if you remember CMGI.
Oh, yes, of course.
And so by the time I started, I worked for CMGI Solutions. Okay. And it was the most insane time. There was so much money being thrown at these businesses. Can you maybe talk about what that year at IXL was like?
Yeah, it was in the heat of the internet bubble, effectively, and a lot of that was, grow as fast as you can. We were preparing for an IPO. One of the metrics on Wall Street was billable headcount, and so they wanted you to hire engineers as fast as you could find them because Wall Street was kind of crediting companies with billable headcount as a metric, which didn't make a lot of sense to us. One of the things that was interesting for IXL is they did 32 acquisitions, I believe it was, and so we were, I think, one of 2 profitable companies they acquired. And so we were very much focused on building a good business, and they were, effectively forcing us to grow much faster than profit would allow. And some of the other, companies that were acquired, the founders of Wayfair, were their company was acquired. They were peers of ours at the time. And so you're sitting around with all these young, driven, smart people, but Wall Street was really pushing the narrative. And so it was a crazy time. I resigned the day after the IPO. And so I effectively checked the box and said, got the money, made it through the IPO, made a ton of mistakes, but left the next day to start my next company.
That's awesome. And so was that internet soccer?
It was. Yeah.
Okay. So talk to me about that. We've talked about your passion for soccer. What was internet soccer? How'd you go about starting it? I'm assuming you weren't you didn't just come up with the idea the day after the IPO.
No, exactly right. So I had this real passion for soccer, and because we were early in the internet, we kept seeing things develop, and I was sort of looking out in my mind a few years out and thinking there are soccer fans all over the world, many of which are outside the U.S., which are incredibly passionate, and there was not a great deal of good quality information and content for soccer-specific fans on the internet. And so our idea was take all of this content that we could find about leagues and countries and things around the world and consolidate it in what I think we were calling it a portal at the time, but it was basically a vertically focused, all we did was soccer. But we became a big content business. We became the largest producer of non-televised soccer content in the world very, very quickly. We had an e-commerce offering. We partnered with the largest soccer-specific retailer in the world, but we were so early that we had thousands of products for sale, but no one was buying anything yet.
Sure.
So we were really, really early. But it was an awesome opportunity for myself and some others that were really passionate about soccer to kind of drive a vision of what should that look like on the internet. And so we did a bunch of acquisitions, built up the company really fast, got to a term sheet from a group in New York in March of 2000. One of my co-founders and I were sitting out west skiing, smoking cigars, celebrating this term sheet and thinking about what it was going to be like. And then I think it was about a week later, the NASDAQ crashed and kind of the bubble burst.
So March of 2000.
Correct.
So, I remember that time well, because a lot of the crash is credited to have started with some earnings problems that MicroStrategy reported, and they were one of the big high flyers among many, AOL and others in DC where I'm from, and MicroStrategy precipitated that. And I remember I was still in school and I'm reading about that and I'm seeing things unfold, and I'm calling my recruiter at Talon. Now it's Talon, it's not CMGI Solutions yet, and I'm like, are we going to be okay? And he's like, look, we're well funded, we're not pulling back. And but it was scary. It was interesting times for sure. So all of this is unfolding. The NASDAQ crashes, falls to maybe 33% of its value. So the term sheet gets pulled back, it sounds like? Or?
Yeah, it was kind of getting renegotiated, and we effectively tore it up. And what's amazing, and I'm happy to go into this in more detail, but I know there's a lot of stuff we could cover, but that period from March of 2000 until we sold the company was perhaps the craziest 4 to 6 months of my life, because we were, at that time in March of 2000, I think we had about 10 days of cash in the bank.
Wow.
And I had a team of 60.
Wow.
So
I've been in, not quite that extreme, but I've been in that boat where you're like, what are we going to do?
Yeah, we were just back at the wall because we really were confident we were going to be able to raise money. Mm-hmm. It was just a question of which firm, which terms. We had a term sheet for $15 million, which we didn't need, but about $3 million. So we were in a great spot in our minds. We didn't need to worry about cash or burn. And all of a sudden, the rug gets pulled out from under us, and we're thinking we're not going to make it, 10 days.
Well, so I want to talk about one aspect of this that's really fascinating to me. So how differently do you think you would have reacted to that had you not just had an 8-figure exit recently? Because on a personal level, it changes the risk calculation. It changes a lot of things for you. Have you ever reflected on that and thought about how you might have thought differently had you not had the IXL money in your bank account?
Yeah, I have a lot, because I also, one of many, many mistakes I made is in the post-IXL IPO, this is, again, sign of the times. Henry Blodgett, who was kind of one of the icons of the industry.
He's Business Insider. Was he Business Insider?
Exactly.
Yeah.
And at the time, he was kind of the iconic Wall Street internet guy, effectively. And I spoke to him on the phone personally about my IXL stock, and I did not sell hardly any stock. I mean, my net worth was 90%, IXL / other tech companies, because that's all I knew. I didn't know anything about stocks or bonds or diversification or any of those words that make a lot of sense to me now. And so I was also watching my net worth and life fall off a cliff in March of 2000 because, my wealth was in tech stocks.
Yep.
And so even though I felt very good about the fact that I knew how to generate opportunities. I knew how to generate wealth in my mind. I was also watching a lot of what I thought and believed and was confident in disappear. So we were in a tough spot, but I think what's so cool about the story in hindsight is that pressure. It does sort of date back to, the soccer field. You're down, you've got 5 minutes left in the game, you're about to lose or something. And so myself and my partners were really kind of digging deep to say, all right, well, we're not going to let this go under. Like, that's just not an option. Mm-hmm. And so I boarded a flight to Europe and had one of the most interesting 24-hour periods of my life where I got on a plane to go to London, where most of our big competitors were. And I had no meeting scheduled, and I knew if I got back on a plane to the U.S. without a deal or a term sheet, our company was going under. Mm-hmm. And from landing in Europe and calling one competitor and telling them, about the meetings with the others and creating some leverage, we ended up getting a term sheet from a public company in Europe that ultimately acquired the business for 8 figures and made it all work out great.
It's awesome. Like you said before, it's easy to connect dots in hindsight, but I bet at the time it was the dots didn't seem as connected.
No, I during internet soccer, for whatever reason, I think I had read a book about someone keeping a diary or keeping a daily sort of journal, and I had never done that in my life. For whatever reason, I chose to do that from the day we started internet soccer until the day we sold it. I had a daily journal. And when I tell the stories about internet soccer, I think of it as one of the greatest experiences of my life because it was an area of passion. We had a great outcome. I read the day-to-day journal, and it was like, sleeping on the floor, throwing up. I'm so stressed out. Wow. I mean, it's like, wow, we were really in the grind. But in hindsight, it's like, oh, that was great.
Yeah.
So,
well, that's awesome. So you've got, once you get the term sheet and the wire's clear and the ink dries, you've got to be reflecting on what you've just been through between internet soccer and In Touch Interactive and thinking I can conquer the world. Right?
Yeah, I think there is a tendency, particularly when you're young and immature and all the things that I probably could have been called. I mean, you can sort of conflate luck and skill and timing, and I was very fortunate, and I still consider some of the biggest critical success factors like who I partnered with and who I was around. I had awesome people around me. But yeah, we definitely thought we had a formula that was like, this is just repeatable. I can keep doing this. And so I was very confident. I was relieved that we were able to get to that exit door because we watched a lot of our contemporaries, crash and burn and watch a lot of wealth and a lot of opportunity disappear after March of 2000. But for me, it was a very strong validation of, if you're committed to the outcome, even when the odds are incredibly low, like 10 days of cash, you can get there.
So fly to London without any plans and just make a pact with yourself that you're not leaving until you have a term sheet. That sounds
exactly
easy.
Right. Yeah.
Sounds very repeatable, Mac.
Yeah. That part of the formula, not repeatable.
So I believe from a LinkedIn stalk that the next thing was Team Talk. Is that correct? Was that the next company?
So they were the buyers of internet soccer.
They were the buyers. Okay.
Yeah. So that was a publicly traded company out of Europe. They were owned by News Corp and Sky at the time. And I ran U.S. operations for them for, I think it was 365 days exactly. Okay. Which was that was a repeatable formula for me.
Yes, that I've seen. That seems to be pretty consistent. My first exit, I stuck around for 2 years, and then the next exit, the second exit that I had, which is the only other one, was in hindsight was actually very fortunate. My partners and I didn't see eye to eye in late 2018. I wanted to acquire a business that was about half our size or 2/3 of our size and kind of double down on it. And they decided it was time to sell. And when there's 3 partners and 2 of you want to go one way and 1 wants to go the other, it's obvious where you go. So they asked me to step down as CEO. I remained on as a shareholder, and in retrospect, it was one of the best things to ever happen because we sold it in April of this year, and I was treated as an investor, not as an employee. So I went from a 2-year earnout to a 0-year earnout, which feels really good. I got to figure out how to repeat that one.
Yes, that's a great strategy.
So, the business that I've heard the most about from your past, I've heard a lot about Kick, which we'll get to, but Etain in particular is one that's closest to my wheelhouse, my background in technology services. And Etane's obviously a huge name with lots and lots of people. I see you were CEO there for a year and a half. Did you start Etane, or were you brought in to run it because you had the experience selling to IXL? How did that all play out?
So yeah, Etane was actually a merger between. I'm blanking on the original company that we started was called Etane. I think Etane Group or Etane something, and then Tech Solutions, which was a technical staffing company. Tech Solutions was the founders of Tech Solutions were friends of mine from Wake Forest back in the day. I was sort of tracking them as they were getting started as entrepreneurs. I think they may have been clients of In Touch Interactive, so we had a really good, close personal relationship. In March of 2000, sort of ironic timing, I also co-founded Etane. So I was in the middle of running internet soccer, seeing all these opportunities. So with the founders of Tech Solutions, we created a new business, which was meant to be more software development, custom software. And so I started that in March of 2000. We raised a little capital. I was chairman at the time, largest shareholder, but we hired a team, a CEO, CTO. And then about a year later, the NASDAQ had crashed. Tech companies were really struggling. That business had burned through most of the capital we'd raised. And I was asked by the board to come in and turn it around. And I agreed to come in, but part of that process was we were going to merge the company with Tech Solutions, create a larger business, try to get it profitable. And so that was kind of the origin of what is now Etane. Is sort of merging those companies together, and I was the CEO and largest shareholder through kind of that process.
That's awesome. And so, can you talk a little bit about because internet soccer and to a lesser extent what you were doing with IXL, those are a little bit sexier businesses in many people's minds than a staffing business. Staffing businesses are typically lower margin, a little bit more of a grind. I've met the founders of Apex Solutions, and they did very, very well with it. So I don't care how unsexy it appears. It's sexy to me because they did well. Let's just put it that way. But can you talk about the difference working for an internet soccer? This is a scalable content-based business. It can scale to internet scale. Staffing can't scale to internet scale. It's inherently a linear progression. I sell a body, I hire a body. So there's differences. Can you speak to the difference running one type of business versus another and how you approach the two? And I may be wrong in my impressions of Etane there, and you can correct me if I am.
No, I think it's a key insight, and one of the things that led to my decisions around Etane. So at the time, again, we merged what was a traditional tech staffing business with a little bit more sexy custom software development, not super sexy, but a little more. And part of the idea there was really this kind of hybrid model that would be a little higher margin. We could work very, very fluidly with large organizations and kind of meet all of their needs. But it was also, this was early 2000s, and the tech market was really distressed. And so part of my vision, because we had done a lot of acquisitions in internet soccer of really small companies that helped us grow quickly, part of my vision was buying distressed tech companies and really bulking up. And so what I was excited about as a CEO and as a shareholder was the M&A opportunity, the fact that the market was distressed, the fact that I thought we could create some real scale through acquisition. And ultimately, that thesis, whether it was right or not, that became similar to your story, a conflict between myself and some of my co-founders and the board, which ultimately, it wasn't a bad decision by any means, but the chairman of the board at that time, largest investor, sat down with me and said, Mac, you have a key decision to make. You've built and sold a couple companies, you're young, you're the CEO of this business. At the time it was, I don't remember, maybe 15 million in revenue or something. So it was still relatively early. And you can stick around and operationalize this business and grow it as a CEO and become a CEO in your career. Or you can resign and start a new company and you're a startup guy. And I thought that was a great question. And I thought about it for about 24 hours and said, I'm a startup guy. So I sold my interest to my partners, and they continued for, at least another decade to build that business. And had a great exit. I mean, they're awesome guys, smart guys. Just you could see the difference in interest path and trajectory, because between that time that I left and they sold it, I had 5 or 6 other companies, and they were in the same one that whole time.
Yeah. I think that's a key insight there. Peter Thiel talks about the 0 to 1 versus 1 to N, and I've definitely come to realize I'm a 0 to 1, maybe even 0 to half. I don't know.
Yeah, me too.
So, very cool. So, so now you've been involved in internet businesses, media businesses, staffing businesses, solution businesses. Naturally, you start a clothing line next.
It's the clear next step, right?
Naturally. So talk to me about Mountain Khakis and how, because that's a pretty big brand name at this point that most of the listeners will be aware of, not just the ones here in Charlotte. How did you come up with the concept? What was the concept, and how did you talk yourself into I can do this?
Yeah, it is a funny sort of path, because really the reason Mountain Khakis existed for us is because I, like some of my partners and people I tended to work with in my little group, were getting a little tired and burned out on some technology stuff. I mean, I think the going through the process at Etain, looking back, it made tremendous sense. But going through it, it was emotional, and how are we going to figure this out? And should I leave? Should I stay? And I just really felt like I needed a break from technology, because it was a lot of work. And shortly, maybe a day or two after I had resigned from the board of Etain, I was sitting at a breakfast with a gentleman talking about investing in tech stuff. And he asked me if I ever invested outside of tech. And I said, I haven't. I'd be happy to consider it. And he said, I've got a young guy who has an idea that is really struggling to get traction. And so I followed him out to the parking lot. He handed me a business plan, and it was for an apparel company. And he said, he's been trying for a year or two to get this thing going. He's about to give up. And I just said, I don't do apparel. I like clothes, but I don't know anything about apparel. I don't know how to do that. And I said, well, just take the business plan home, and maybe you can help this, I think he called him kid, because he was young at the time.
Is that Ross? Or?
No, this was a gentleman that he literally had an idea, and it was a really good idea, but there was no product. There was a name, Mountain Khakis, and there was a watercolor sketch of a pair of pants. And the idea was effectively that in places like Jackson Hole, Wyoming, which became the sort of the spirit foundation of our company, there were this large concentration of wealth, these billionaires that were living there, and they were wearing $400 and $500 Gore-Tex jackets, and they were, but they were wearing Carhartt pants, which were like $30 work pants, and they were stiff as a board. And he said, there's got to be a product that is durable enough for life in Jackson Hole, but a little more fashionable. And the imagery in the business plan just sort of caught me emotionally. And so I read it and said, this is a cool idea. I would enjoy helping this guy. Got on the phone with him, decided that, I could help him, decided to, kind of jump in. The gentleman that gave me the plan also wanted to be involved. I called, Ross, who had been a kind of a longtime co-founder or partner of mine in various things, and said, as I do with Ross a lot, I'm not going to do it unless you do it, because I know my strengths and weaknesses, and I need, smart people around me to balance myself out. So yeah, we started Mountain Khakis from a business plan. The gentleman that had the idea, we ultimately bought him out before we even launched the company, because he had the idea but didn't really have a lot of additional things to add. And so we went to the mall and bought a bunch of different pants and started cutting them out and figured out how to create pants. And it was an incredibly fun learning experience for me. So new industry, new process, everything about it was different than what I had done up to that point.
Could you use some of your internet skills? Did you guys do some direct sales or do a lot of internet marketing? I'm assuming that was a source of competitive advantage at the time before people had kind of figured the internet.
Yeah.
Still haven't figured it out at that point, right?
That's for sure. We were, yes, great point. We were early. We launched at retail and e-commerce on the same day, which was kind of unheard of at the time, because retailers hated when you also sold on the internet. So mountainkhakis.com launched the same day that we put products in, retail stores. The other thing that served us incredibly well, which is interesting, is because we were outsiders, we were coming into an industry, and everyone within the industry was telling us what we had to do. and we kept questioning everything. You have to ship products by this date. These are the ship windows. You have to have a fall line and a spring line. You have to do all these things. And we kept saying, why? That doesn't make any sense to us. And so we did things that were very contrarian to the industry that we were entering. And those things ended up being the smartest decisions we ever made. So Mountain Khakis, within probably the first year was outselling North Face, Patagonia, Columbia, all the biggest brands in the pant category, because we were thinking about it completely differently.
That's awesome.
Which served us really well.
Very cool. So ultimately, you guys sold Mountain Khakis?
We did. We sold 75% of the company to Remington, effectively, their parent company, which was called the Freedom Group, a Cerberus-backed entity that owned Remington and some other gun and ammo companies, as they wanted to enter the outdoor space and kind of diversify away from, black guns and ammo. And so we sold 75% at that point. I stayed on the board. I left sort of day-to-day operations. Ross stayed around at that time and continued to run it. And then the business was sold by Remington and the rest of us shareholders again a number of years later.
So you got 2 exits out of that one.
Yeah,
Does that count towards the 6?
No, that's not. I guess that would make it 6.5, right?
Exactly. Well, that's great, and it is interesting when you can rethink an industry and not be constrained by the things that got you here. And I think that's a large part of why Amazon's been so successful as a software vendor, is that they've completely rethought the relationships. It's painful to partner with Amazon when you're used to partnering with a Microsoft or an Oracle or an IBM. But because of the way they've rethought everything, I think that gave them a huge advantage over the incumbents, and why they were able to create an entirely new category that nobody other than Microsoft has been able to even remotely approach. And I think it's a testament to thinking differently.
Yeah, and I was going to say, even when you just use the term thinking differently, I mean, obviously every entrepreneur in some ways looks at Steve Jobs and talks about his career and what he's done, but what an amazing example of how funny it is to look at mid-late 90s, early 2000s computers and think every computer on earth was a beige box.
Yeah.
And you felt like it had to be a beige box. Like, why was that, right? And so until people come along and question things, and finally you're seeing that now, the entrepreneurial sort of vibe, I hear it a lot when I'm talking to people, is they're questioning everything. They're trying to intentionally break sort of paradigms. But back in the, mid 90s, early 2000s, especially in a place like Charlotte, there were not a lot of entrepreneurs, and it was definitely not cool to be an entrepreneur. I always think about going to my kids early, when they were in school, and people would say, what do you do? And I would say, I'm an entrepreneur. They would be like, oh, like, sorry. Yeah, like you couldn't get a job. Yeah. The bank wouldn't hire you, so you decided to become an entrepreneur. So yeah, it was not easy to be contrarian or do these kind of things when no one else was doing them.
Yep. Absolutely. I think that's I think that's great advice, and I think that the point about everybody everywhere is now trying to replicate this. I think that there's a lot of people working in big companies who have opportunities to do entrepreneurial things, and I think that that's exciting. And I tell a lot of people, maybe you don't need to go work for a startup. Maybe you need to find an Avid Exchange who's raised plenty of money but still has that spirit, or find a company that's reinventing itself, because it's a lot less risky. There's going to be a lot less of the curling up in a ball on the floor and throwing up and eating peanut butter and jelly if it's funded by
That's very true.
So I talked about Kick. I told you before, when we were talking before this interview, that I'd done some work with Stratified, and they were and they were occupying the same space that Kick used to be in. At some point I visited the Kick office, I think, to just meet somebody. Don't think I met you though, but can you talk about Kick and what that's all about? And that's KYCK, correct?
Correct. Yeah. So Kick was almost like round 2 of taking the intersection of my passion for soccer and my love of technology and seeing some business opportunities. But what we tried to do was really inspired by a funny experience I had. So I was out in San Francisco at an event. My oldest daughter was a soccer player. She was playing in a tournament in Charleston, and I flew across the country. And, you think about sort of the sign of the times. I, downloaded a boarding pass. I was able to get on a flight, go through TSA with this boarding pass on my phone, book my flight online, book my hotel online. Everything was very digital.
Maybe took an Uber.
Yeah,
paid for it with Apple Pay.
Everything is just digital. And I arrived at this tournament check-in in Charleston, and we go into the kind of the lobby of this hotel, and the little desk is sitting there, and they ask our name, and they pull out a 3-ring binder and start flipping through rosters, and then they hand a laminated player card to my daughter, and I was thinking, what in the world is this? Like, here I am, a tech guy. This is the area of the world, soccer, that I'm so passionate about. I can fix this. And so Kick basically set out to kind of digitize the soccer world, from player carding, rostering, registration, all of the pieces that I thought really needed to be rethought, reconsidered. We had a really big vision for that, and that's kind of what we started out and set out to do.
And is that ultimately where you guys were, or was there a pivot somewhere along the way?
We had a couple pivots. We started out with a little bit more of a social kind of strategy, and then determined that registration and player carding was an opportunity that was needed in the market, and that there was some opportunity that would tie to partnerships and funding. One of the things that I have focused on a lot over the years is distribution, because I never thought we would be funded well enough or good enough at sales to outsell competitors. So I was always looking for a partner who could help me get my product to market at scale. And so we found a couple of partners in the soccer world that had huge distribution and really antiquated technology. And so my agreement was, I'll rebuild your technology if you make it the exclusive default solution in the market. And therefore, I would be kind of instantly the market leader. So we started doing that. We did player carding with our first partner, and we got 3/4 of the youth clubs in the United States using our technology through that partnership very, very quickly. And we're on a path of kind of checking off step after step when we had to make a decision to raise more money or to sell the business at a time that the competition was heating up very, very dramatically. There were some tech companies that were getting funded, raising $40-50 million. We'd raised a few million. And then there were some very large media companies that were kind of coming down into the space. And so we were being converged on at every angle. And ultimately, we decided that it would be better for us to sell to someone that already had the capital, the distribution, the team that we were not going to be able to fund. And so we sold the company to NBC Sports in, gosh, I don't even remember what year that was, maybe 2013 or something like that.
Okay. That's awesome. And that your discussion about distribution, I think is spot on. I had a guest on the podcast who he asked me my thoughts on what's more important, product or distribution, and I said honestly, I think distribution trumps product every day.
Hands down.
And it's why companies like Salesforce can buy a Map Anything at eye-popping multiples. It's because they're not looking at what it's selling today. They plug that thing into their distribution, and you've got thousands of sales reps all over the world selling it, and channel partners, and it just takes off. And product's important, I tell people, but get the distribution first, and the product can come later.
No, I could not agree more in terms of the importance of distribution, but you also just touched on something else that is really powerful, and we can talk about this more if you want, but I always tell founders when it comes time to sell their business, you should never use your math, you should use the acquirer's math. And you just gave a perfect example. It doesn't matter what Map Anything's revenues were, or distribution, or customers, or EBITDA. What matters is, what is it in the hands of Salesforce? Because the next day, Salesforce can plug it into the largest channel on earth. And so we did the exact same thing when we talk about NBC Sports and some of the other companies that we were looking at the time as potential acquirers. We were this little team. We had amazing partnerships, but we weren't even capable of capitalizing on those partnerships because we didn't have the resources. But we could say to NBC Sports, like, the day the deal closes, you have 80 engineers, you have unlimited balance sheet. And so their math is what matters. And so that's a real key insight for entrepreneurs.
Yeah, I was involved in a company called Amentra, which was the first exit I was involved with, and we were acquired by Red Hat, and we were 130 people at the time of the acquisition. And within a few years, it was a 1,000-person team, because it's being sold in every corner of the planet with very deep relationships. And it was seeing that firsthand. It was very eye-opening to me what a company that acquires you can do. And to Jim Whitehurst's credit, this was the first acquisition that he did was our company. And he said, I'm just going to back up and let you guys do your thing. I want you to keep your name Amentra. I want you to keep all your same software. We're not going to touch you for 3 years at least. And because they had a bad track record of acquisitions prior to that. So I think you can it doesn't always work out that you get plugged into the system and it just works. But I think with good leadership, that it certainly can happen. And we saw that firsthand.
Yeah, distribution is, I meet a lot of entrepreneurs, as I'm sure you do as well. They have either vision or already great product. And I kind of immediately go, let's put that on the shelf. Like, how do we get this to market?
Yeah.
And if they don't have a good answer for that, I immediately think they're going to get passed.
Yeah.
Someone with an inferior product is going to pass them.
They'll end up in a fire sale rather than an 8-figure exit, right?
No question.
Yeah.
That's right.
Very interesting. I could talk about this forever, but I did want to talk about a couple more things with you. Number one, I see you're currently still involved in running ISL football. Can you talk a little bit about what that is?
Yeah, so ISL was a fantastic experience for me. About the time we were building up Kick, again, soccer is a huge passion. My wife and I had this conversation about potentially moving abroad. We pulled our daughters out of school and decided to travel for a year. And in that process, we spent some time in Barcelona and thought, we went to like 15, 16 countries, but we really fell in love with Barcelona. I'm a big Barcelona soccer fan. I happened to meet 2 young, incredibly talented college students who were in all places, Charlotte, North Carolina, that were from Barcelona, that had an interest in doing some Barcelona-related soccer camps. And so we put together a company to bring some of that methodology from Barcelona to the United States. That very quickly went from a Barcelona kind of idea and methodology to an official relationship with FC Barcelona. We became their largest partner in the United States. We built up that business around the U.S. and now in some other countries. And I was, at the time, again, running another company. I was, chairman, largest shareholder, advising these 2 young, super talented guys that were just starting their first business. And so I actually technically sold my interest in that business to my partners in a hedge fund a number of years ago.
Okay.
And so I guess I'm technically still sort of chairman emeritus or whatever the right term is. And I actually had lunch with them on Friday. They had just flown over from Barcelona. So that business is still growing. But
now I'm making the connection. We were talking about Stacks, the CrossFit gym where I used to work out at, and I remember seeing FC Barcelona there. So that's how that was us. That cross paths, and very interesting. That's very cool. And obviously, so now you've been involved in 3 businesses that are directly related to soccer. So that I think is the only underlying theme that ties this all together, other than the core principles. I think that it sounds like there's some core principles. Surround yourself with the right people, delineate authority properly, find some distribution, and it doesn't matter if you're selling khakis or you're selling content or you're selling you're selling a soccer methodology. Some of those core concepts probably apply to anything.
That's exactly right. People will say, what in the world is the thread between your businesses other than perhaps soccer for those few? And you just nailed it. I mean, for me, it is every one of those businesses they were tech enabled. So sort of tech, which creates efficiency and scale, finding distribution. I can get pretty excited or pretty comfortable with any business if I can solve for distribution. And so even with that FC Barcelona, early camp idea, the reason we became their largest partner in the U.S. so quickly is because they had other existing partners that were putting 50 kids in a camp or 100 kids in a camp in major markets like New York and L.A. And we came in and said, we'll take, Charlotte, Nashville, and we sold out camps with 400 or 500 kids. But that's because we had partnerships to reach a lot of families that were interested in soccer. So distribution has been a big, big part of my sort of strategy.
Awesome. So what's next?
So I sold what I sort of think of as my last kind of exit. October 2018 is when I sold my interest in ISL. And almost immediately after that, I took the first break really in my life, because even when I was traveling, I was always running companies and I was going from one to the next, sometimes overlapping, as we've discussed. In parallel, I was running multiple companies. So I really took time off for the first time in my kind of working career and said, what's what did I do that worked? What are the mistakes I made? What do I want to do going forward? About that time, I was asked to speak at a big entrepreneurs event in Utah, and they asked me to talk about exits. And I candidly was like, hey, I'm not a great speaker. I'm not a guy that gets up on stage. And they said, just tell stories. Just tell us about what, good and bad happened. And long story short, I walked off the stage. I was nervous. I had total imposter syndrome because I was looking out at the faces going, I know who you people are. I've been following you on Twitter for 5 years. You're bigger than me. Why am I on stage? But I walked off stage, and a group, probably 8 or 9 of these entrepreneurs, kind of jogged over to me and said, Mac, we need your help. Everything you talked about in terms of how you built your companies, how you found these buyers, how you drove maximum exit value, you never once said anything about financial multiple. You never said 6 times EBITDA. You never said 1 times revenue. And it was like this epiphany moment that I thought, philosophically for me, I would never sell a company for a financial metric. But every one of these entrepreneurs was hearing, that's how you exit. That's what their bankers were telling them and their CPAs. And so, incredibly long story short, I thought I have a unique set of experience where I can help these founders who have amazing businesses. But what makes them amazing is their domain knowledge. They're designing khakis or their soccer companies or whatever they are. They don't know how to exit a company. They've never been through this process. And so I created a program, a group called Exit DNA. And the idea was simply, can I help founders really optimize their companies so they have the option to exit at maximum value in the future? And started it as kind of a test in 2019 and fell in love with it. So I've been spending most of my time with Exit DNA, working with founders and entrepreneurs who will ultimately go on to sell their businesses. And I'm really the guy that's kind of helping them behind the scenes set up that distribution deal, set up that exclusive agreement, set up that strategic value that's worth a lot more than 6 times EBITDA.
That's really cool. And just a quick side note, I think what you said about the imposter syndrome, I've always said if you don't feel imposter syndrome at some point, you probably are an imposter.
That's so true.
But that's great that you had that epiphany, because I think you're right. I think too often people start to think about how do I get the best value, and they hire an investment banker who says, well, we're going to go find comps, which right off the bat, you're comparing me to companies that I think suck and that I'm destroying in the marketplace and that I go head to head with and beat. I don't want to be compared to them. And then you're going to use a multiple, and as we've said, nobody really cares about the multiple. They're doing their own math and they're looking at it. And if you can show differentiation, passion, you can show that you understand the market, they can scale it for you. So I think that starting from an EBITDA multiple or a revenue multiple is dangerous. I think comparing those after the fact might be interesting.
Sure.
Especially for your business, because if you can show, the banker would have told you get a 3x multiple. Now, I'm curious, are you building banking relationships? You obviously already have some to where we're going to position this correctly, and then I'm going to hand it over to somebody that I know that I think is a very good fit for you? Or
Yeah, so one of the things that is a little bit unique in my background, and this is not in any way I have a lot of friends and there are a lot of talented investment bankers. My personal experience was not great with bankers. And so we had hired bankers at a few different points along my journey, fired them at some point in the process and decided to do it ourselves. And I think the reason was not that we were arrogant and thought we could do it better, but I was sitting in meeting after meeting thinking, that's not the way I would articulate our vision. That's not the way I would answer the question. And I thought, you know what? Who is better positioned to get someone excited about a business than the founder or the CEO or whatever? And so a lot of what we do in Exit DNA is we empower the founders and the team to be in a position to do all of that themselves, or to at least be a material participant in the process. Some of them, depending on size, personal skill set, et cetera, will choose to engage a investment banker or broker dealer. And in that case, I make recommendations if they want. I have some that I really like that will keep me involved in the process, or they can, of course, choose to work with anyone they want. But I think the key message is you should never outsource that. You should always be involved. Even if you hire a banker, you're still in the best position to articulate, why your company should be worth so much more money. I had a client that someone we were working with that actually got an inbound offer, which is rare. I believe that you have to sell your company, not that people are going to knock on your door to buy it. I think it's a proactive process. but one of our clients and members called and said, "Hey, Mac, I've got someone. We're coming out of beta, really early company." And he'd already sold a business, so he saw the value of what he didn't do the first time. He's like, "I want you to help me the next time." So he's coming out of beta, has 6,000 customers, and says, "It's a public business. They want to buy my company. They want me to assign value to the assets." And I think it's probably $4 or $5 million. And I said, "Why are you talking to them about assets?" And he said, "Well, that's what they asked for." And I said, "Well, what are they going to do with your business?" He said, "Well, we have all this content. They're going to plug it into their over-the-top distribution network." And I said, "Well, how many customers do they have?" And he said, 4 million. I said, "Well, you're charging $16 a month and they have 4 million customers.
It's an asset.
Why don't you cut that number in half? What's that? It's like $80 million when they have your business. So if they're trying to offer you 4 and it's going to be worth 80 to them when they plug it into their network, like, we're using the wrong math here." So a lot of that sort of is what I don't see from traditional investment bankers. And so I really try to.
Well, and also traditional CFOs.
100%.
Because a lot of times people hire people out of banking or private equity to come be their CFO, and they're going to think the same way.
Yeah, and it's not a knock. I mean, they're smarter than me, so it's not a knock against that skill set. It's just making sure that a founder or CEO and entrepreneur says, in addition to having our financials buttoned up and bulletproof and being able to talk really intelligently, what are the other things that are strategically valuable, and can we find buyers that care about those things more than EBITDA? Because companies like Google, I mean, Google buys a division of Motorola for $12 billion. Google doesn't need money. Google's not trying to buy EBITDA. They want a phone. They want a handset, right? So when you find buyers that are trying to buy a strategic asset, the EBITDA multiple doesn't matter anymore.
Yep. Yeah, I couldn't agree more. Now, you had mentioned that you've recently, I don't think you worded it this way, but you've recently found blockchain religion. Is there anything you're looking at to commercialize in the blockchain space, or is that more of just a hobby and a passion right now?
No, it's actually something that has caught me by surprise, and the reason is because as of, like I said, 2018, I was kind of thinking, I'm not going to start another company. I'm going to help people. That's what I want to do with the rest of my life. I want to enjoy my life, spend time with my family, and help people. And Exit DNA was kind of my vehicle to do that. And then I had this idea where a couple things came together around blockchain. And it is probably, I may have shared this with you, it's probably the first time since the early 90s that I felt like I'm seeing something that I'm convicted is going to change the way everything works and happens, and other people aren't reacting or seeing it. And so I remember that energy from 95, 96, 97, early Web 1.0 world, and that's exactly how I feel right now about blockchain and related things, NFTs, crypto.
I was going to say, I'm picturing soccer coin, I'm picturing soccer cards that are NFTs.
There's so many applications, but in a very similar way, what I was so excited about in 95 and 96 was the e-commerce and how it was going to change kind of the way business was done, not, putting up a web page and doing marketing, which is a lot of what people are talking about. In a similar way, I look at, like, I've actually filed a patent. It's the first patent I've ever filed recently around putting digital contracts on physical assets. And so when people talk about NFTs right now, people default to art, collectibles. All those things are really cool and interesting.
Yep.
But I'm sort of looking at what are the underlying characteristics of NFTs and smart contracts that are going to change the way we interact and do business. And so my patent is really around kind of financial transactions tying physical assets to digital assets. And so, yeah, I'm really excited about it. It's not something I expected to happen, kind of forming a team around it. I've got some developers. I've got some IP attorneys that are doing work for Square and Amazon that have written the patents. So, yeah, it's fun because it's really energizing me right now.
That's awesome. Yeah, you definitely seem energized. But can you maybe speak to the importance of that, that gap year, if you will, that you took from 2018 to 2019?
Yeah, and it wasn't even a year for me, and I think it's different for everybody. A lot of my life, with the exception of that very first business where I was putting in, incredibly long 7 days a week, 80, 100-hour weeks, sleeping on the floor in the office, all the things you're not supposed to do. But after my daughter was born, my life has been very, very focused on businesses I wanted to create and time with my family. And so I've kept a really good, healthy kind of, quote unquote balance on that. So I didn't really need the like, hey, I need to stop working for a year to like slow down, because I work 7 days a week and hang out with my family 7 days a week, you know? And so to me, it wasn't like I needed a gear shift as much as clarity, but taking some time. I think it was a couple months where I really just sat and forced myself to sort of quietly think, which is hard for me. And it was really a reflection on being critical of the mistakes I made, because I made a bunch, you know. I mean, we talk in shows like this, it's the highlight reel, right? You know, I had 6 exits. That's awesome. But I also lost millions of dollars and had awful things happen and made tons of mistakes. And, you know, so I sort of took the time to look at all that and really digest it and say, what do I want to do differently? As a human, how do I want to act differently? How do I want to present myself? And then business-wise, what do I want to do more of, and what do I never want to do again? And so that was incredibly valuable and helped me get a lot of clarity about what the future looks like.
So I want to ask you about that. Do you have one thing that if you had a do-over, it comes to mind that I wish I had done this differently and it would have been different, or are there just a bunch of small things and not one that stands out?
Well, I think the one that I've been probably the most vocal about, you know, one of the worst things that's ever happened to me in a business context is I went through litigation with a business partner, and my Ross, you know, my longtime business partner and my mentor and several of us ended up getting sued by what I thought was a friend and a business partner. And it really, you know, appears in hindsight like an effort just to hurt me, me in particular, even though it was kind of aimed at several people. And what I, you know, I've taken a lot of time to think about it. And what really I did wrong is I knew in my gut and heart that that we should not have partnered. It was not a good guy, didn't fit our culture, didn't fit our vision. I was being greedy because he was really smart and he had this unique skill set that I thought, okay, we can really capitalize on this because he's just a unique talent. And so I'm going to overlook all of the gut that is telling me, and including, you know, even a few people around me telling me like, you know, don't do it. Because I've been so heavily focused on who I spend time with and who I work with and who I won't work with and how I, you know, ethics and all that stuff. And I broke those rules for this business opportunity because I was being greedy. And, you know, it came back to bite us. I mean, ultimately that business, you know, struggled as a result. I mean, it cost us a lot of money and time and heartache. I mean, ultimately, we knew we did nothing wrong. We won, but like, what do you win, right? We won in court, but it doesn't matter. And so I really thought differently from that point on about, you know, doing things. One, don't go against your gut, but also really staying true to kind of the moral ethics and feeling about stuff that you hold important. You know, who you spend time with should be at the top of that list. My mentor used to always say, you know, care more about the who than the how much. And like, that's just even more powerful when I look back on that situation.
Wow. Yeah. I've had a similar experience where with, you know, multiple times with a particular individual where I tried to look past differences. I won't say they're not as immoral or, you know, legally, or, you know, not quite the level, the depth of what you're talking about, but just differences between the two of us. And I always had the hubris to think, oh, I can manage that. And the reality is it was a bad decision on my part. Again, not nearly to the extent, didn't end in litigation, didn't end that way, but certainly can appreciate that sentiment. Well, this is great. I've just got one last thing before I let you get out of here, Matt, because you got 2 businesses to go run. So if people want to meet you or get your advice or try to partner with you or raise money from you, what advice do you have to them? Not tactically how to get in touch with you, although, you know, if you want to share that, please do. But what advice do you have to people about how to approach someone like yourself? Because a lot of people ask me that. They're like, how do I get in front of people who have had success before, people who are investors, people who can bring a lot to bear? And I think that's very useful advice for these people to hear. How do you reach out to a Mac Lackey?
Yeah, no, it's a really good question. I wrote a blog post, gosh, it's got to be 5 years ago now, with a funny title. It's called "Why Should I Meet You or Care?" And I wrote it after coming back from a trip because I went through my inbox and I had, you know, 100 or so emails that were all of the exact same nature. Can I pick your brain? Can I buy you a cup of coffee? And the challenge for a lot of people, certainly I would say I'm in this category. I don't have some overinflated view of my time or value, but I am really busy and care about things. Like I'm not sitting around having casual coffee with anybody because I choose to spend my time with my family, and any other second is probably on a project I'm really excited about. So if it's not in that one of those two buckets, to me, it's like that is not how I allocate time. And so the only thing that sort of deviates from that is I genuinely want to help people. And so people helping me identify why this is a good meeting kind of breaks through all that clutter. I'll give you the perfect example. ISL exists because a young college student reached out to me cold, which a lot of people do, and he specifically said, I heard from he found a warm connection. Our mutual friend said that you were a huge soccer guy. You loved FC Barcelona. I have a present for you from Barcelona. And I thought, what a thoughtful young guy. I want to talk about Barcelona. It's worth 20 minutes. Hours later, we're sitting in my home office talking about starting our first business together. And so making it a reason, it benefits my kids. It's something I care about. It's something that matters in the world to me. Which is I'm pretty vocal. I write about stuff. I talk about it. So if it fits in one of those buckets, I'm very likely to say, let's figure out a way to talk. And so for me, I wrote that blog post because, I also think it's really hard for people to put themselves in someone else's shoes. And I've learned this, again, very slowly over the years. I was doing the exact same thing as a young entrepreneur. I wanted anybody that would help me, mentor me. I wanted their time, not realizing that they make, effectively $2,000 or $3,000 an hour. So asking for a cup of coffee is like, hey, can you go burn a couple $1,000 so I can, hand you $2 worth of coffee? And so thinking about that differently has really changed my approach to asking people for help or time. It's like, okay, what would be really meaningful to that individual? And the more successful people get, it tends to be less and less about money and more about other things, about their kids or about their nonprofit or about their passion. And so, right now, if someone can help me with, blockchain and things I'm excited about, like that moves to the top of my list, not an opportunity to make an extra, a couple $100,000. Hey, this could be great. You'll make money on this, Mac. I'm like, that's not motivating to me. Not that I don't care about money. I do, but like the motivations are different,
Well, I think it's just that as you make more money and have more success, you value time over anything. And like you said, your time clearly goes first to your family and next to your passions. And so I think people need to think about that a lot when they do want to approach somebody. Number one, is this worth their time? Am I wasting their time? And to me, I've got a few friends who network very heavily, and I've got a couple where no matter what, I will always take the meeting if they ask to introduce me to somebody, because I know that they're vetting it and that they're going to make sure that they don't waste my time.
And that's such a key part of it too, is if you're raising money or doing anything, and this is true of venture capitalists, it's not just individuals, the warm intro from a trusted person is 10x better than a great business plan or anything else. I'm the exact same way. I have a handful of people, if they send me an email and say, would you be willing to meet with, or I think you should meet with, like, it's on my calendar. I mean, no questions asked.
Our mutual friend, Steve.
Yeah, exactly.
If Steve mentions anybody in any breath, I don't even need to read the email. Yep, send him my way.
Yeah, sure. Happy to meet with him. So I think that's, and doing the homework for, a founder or an entrepreneur, it's not, most of us are connected by 1 or 2 degrees at this point. So you can find your way to anyone.
Especially in Charlotte.
Especially in Charlotte.
Well, look, Mac, I'm so glad to have finally met you. I appreciate you taking the time out of your day. This has been great. Thank you so much.
Thanks for having me.
All right. Cheers.
Cheers.